Hello. Welcome to Prom Over Crypto. We're huge fans of Ray Dalio. Ray Dalio is known for his principles, a set of guidelines for his investment philosophy and decision-making process. The man, in addition to this, has accomplished a lot in the business world. He is best known as the founder of Bridgewater Associates, which is the world's largest hedge fund. Dalio founded the firm out of his apartment in 1975 and went on to serve as its chief executive officer, chief investment officer, and chairman. Most current estimates are that he has a net worth of $19 billion. He recently commented on his predictions for Bitcoin and the wider crypto sphere. So when he speaks, I tend to listen. I want to go ahead and share something he said that was pretty powerful for all of us. But before doing so, I wanted to remind you that the content on this channel is for educational and entertainment purposes only. I love financial stuff, but I am not your financial advisor. Only invest money that you can afford to lose, as all investments carry risk. In 2021, Ray had called Bitcoin an alternative to gold, but also expressed concerns about its volatility and potential government regulation. In his most recent interview, Dalio discusses his updated views on Bitcoin and cryptocurrency. He now sees Bitcoin as a potential diversifier in a portfolio, alongside gold and other assets. He also believes that Bitcoin's volatility will decrease over time as it becomes more widely adopted and regulated. Dalio sees the growth of cryptocurrencies as a natural development of the current monetary environment, which is characterized by high inflation and even higher levels of debt. However, he warns that there are risks associated with cryptocurrencies, and that investors should do their own research and understand the potential downsides before investing. He has been critical of the current monetary system, arguing that it is unsustainable and will lead to a great reset in the future. He has also been an advocate for diversification and risk management in investing, and believes that a well-diversified portfolio should include a mix of assets with low correlations. Dalio's updated views on Bitcoin reflect a broader trend among institutional investors and hedge funds, who have increasingly been adding cryptocurrencies to their portfolios as a potential hedge against inflation and currency devaluation. He also notes that Bitcoin's limited supply and decentralized nature make it attractive to some investors as a hedge against the traditional financial system. However, Dalio cautions that the regulatory environment around cryptocurrencies is still uncertain, and that there are risks associated with investing in such a nascent asset class. He also emphasizes the importance of understanding the underlying technology and market dynamics of cryptocurrencies before investing, and warns against blindly following hype or speculation. In the interview, Dalio expressed his belief that the development of central bank digital currencies, CBDCs, is inevitable, and that they will become an important part of the monetary system in the future. He sees CBDCs as a potential threat to Bitcoin and other cryptocurrencies, as they may offer similar benefits, such as fast and low-cost transactions, without some of the drawbacks, such as high volatility and regulatory uncertainty. However, he also notes that CBDCs may face their own challenges, such as privacy concerns and the risk of centralization. Dalio believes that the growth of cryptocurrencies and CBDCs is part of a larger trend towards digitization and automation in finance and other industries. He suggests that investors should focus on understanding these broader trends and the underlying drivers of change, rather than simply trying to predict short-term price movements. Dalio has previously expressed skepticism about the long-term value of cryptocurrencies, stating that they may be vulnerable to technological obsolescence or regulatory crackdowns. Despite these concerns, he acknowledges that cryptocurrencies have already had a significant impact on the financial world and are likely to continue to do so in the future. Thanks, Ray. I'm pretty hyped hearing about his thoughts on this topic. As always, please remember to invest cautiously and to engage in further due diligence. Additionally, if you found the content helpful and would like to see more, please do like, share, and subscribe to our channel. Make sure to hit the notification bell so you don't miss our future upcoming content. Till next time, take care.